Nation Media Group has just kicked off East Africa's first share buyback program, which should be running between today, that is June 28th, and September 24th. And to help us make sense of share buyback and why this is significant for the market, we are joined by Mr. Geoffrey Dundo. Always a delight to have you.
Thank you. It's a pleasure, Julius.
Jeff, let's start with the sequencing of this, because in June last year, NMG went to the market with a bonus issuance. Now we're talking about the share buyback. Clearly, dividends are becoming few and fast-paced. I mean, and that's understandable because of the necessity of capital preservation. What are your thoughts on that sequencing?
Well, I think it's, thank you very much again for this. And again, congratulations, Nation, for making this the first again in this region. We like these innovations because they do give flexibilities to companies to look at ways of how to reward shareholders. So, as you rightly put it, dividends has been the traditional way in which shareholders are rewarded. And then we also have bonus shares as well. And now the share buyback happens to be a new way of giving back to shareholders as well. And I think it's out of the realization that when the share price is at a level where you feel that it's highly discounted and shareholders are then not getting value, remaining their shareholders, it's always good to give them an option to exercise where they're able to get some form of reward through a buyback. And I think that's really the innovation here. So essentially what a share buyback means is that the company comes to the market and says that would like to buy back some of our shares and hold them back into the balance sheet. And so what they do is that they do make an offer. So there's an offer price, and then the shareholders then are able to sell those shares to the company. So it's a way of reducing the number of shares in the market, such that with that, then you expect to see a price appreciation naturally, because the number of shares trading are fewer compared to what was there before. So it's more like reducing the float that's available for trading. And so the buyback is an option that companies can exercise subsequent to the New Companies Act in 2015. And Nation happens to be the first that we are now seeing this happen. It's been a trend, it's been a common phenomena in more developed markets where we see buybacks happen. And so for us, this is a first, so it's going to inform a lot of potentially future buybacks that may happen. The other thing that a buyback does is that given that you have fewer shares in the market, then the financial ratios of the companies improve, because now the earnings per share appreciate, the net book value per share as well. So from a valuation perspective, the company then starts looking attractive to investors, and that then will probably see that factored into the price.
I like what you put across, because one of the challenges that I have in terms of analyzing this share buyback is that, granted, I mean, the key metrics like EPS is going up, but if you look at the EPS cancellation effect, because if I'm an investor looking at the counter, my question then is, when I'm now doing my evaluation afresh, I have to factor in the fact that from your liquidity position, you have squeezed out some amount to be able to purchase these shares. If you look at NMG, for instance, talking about a price of 25, spending about $500 million shillings in this, then I'm thinking, okay, fine, the metric is looking better, but granted their cash flow position has now been constrained a bit.
Yes.
So it's like two-sided.
Yeah, it's a two-sided thing. But I believe that the decision to do that has to be informed by what are your future plans. So I think Nation has done a lot of improvement in their transformation, digitization, and probably heavy capex that would go into that, and possibly the level of liquidity that they have right now does not necessarily have to go into heavy investment. So they've got cash available, which they could do this. They could make this happen. So that has to be very well informed. It is true that it does thin the balance sheet, the available cash. But again, I think based on the projections and as a business, you see, are you best holding the cash in the balance sheet? Are you better getting it back by giving it back to shareholders in a way through this kind of processes, and really, if you're a cash generative business, then you don't have to worry. So I think the Nation is a cash generative business, so that cash should be able to be restored. The chairman spoke about very good performance this year, and so I don't forecast that they'll have major strains. So I think for an investor, it is a good move in that it then helps your valuation. You can imagine the kind of price depreciation the share has had. If you're holding a long position in your books, you've been carrying negative, you're carrying actual losses for many years, and this is now the time that you'll probably be able to write that back as some form of revenue. So I think it's a decision that you make based on a very informed basis, and I think that's what they did.
One of the things which I think stood out for me in this transaction, rather this undertaking, is that when I analyze buybacks globally, majority are financed through debt. But if you look at the NMG instance, this is actually from the cash holdings that the company has. And I think for me that was a very important issue, because then it doesn't strain the company from a balance sheet position. I don't know what you made of this.
Yes, in fact, I think that's really the way it should happen, because there's no point of incurring debt to go and actually purchase your shares. It doesn't. It's more just going to increase your financing costs. And so when companies have retained earnings to a very high level, then I think it's always good for them to exercise that and reduce that by buying back those shares, because it's a way of also making sure your balance sheet is more efficient. And so I think that was a very, very good way of doing it. I think we would like to see that kind of being the guide, so that if you're really cash rich, then you're able to acquire back your shares. It's really a form of investment that you make to the business. And what Nation is doing also is that these shares are actually not being what I would say totally delisted or totally removed from the company. They're being kept as a separate category called treasury shares. So those treasury shares, if they ever want to use them for anything in the future, even if they want to bring them back to the market, they don't have to go through the rigors of approvals and AGMs with the shareholders and all that. It's a lot easier to carry out a transaction using those shares. You can do an acquisition, you can do a swap. You're able to have so much flexibility. So that's why retaining them as treasury shares is really an option that they'll be able to exercise in future. Yeah.
In a market which is significantly dominated by foreign participation and who come in through block purchases, and then you are undertaking a transaction which then implies that the liquidity position of your counter is a bit thinned out, an investor looking in would wonder then, what does this mean in terms of the ability to be able to come in and exit if I so wanted?
One thing that we were able also, as we were looking at this transaction, what we were doing is telling the issuer that we'd like to see more activity on this counter, because we believe Nation is highly representative of the media sector, and hence it has to remain in our index. And so how they can remain in the index is by this share actually being actively traded. So when you reduce the number of shares, then the liquidity thins out, and potentially stand the risk of lower trading activity because there'll be a lesser volume. So to support this buyback, we also want to see a lot of corporate communication, a lot of engagement with the shareholders, so that the activity of the counter improves, so that they don't fall off the index. The other thing is that international investors normally require minimum float for them to acquire shares. So the other challenge you face when you have a very huge buyback is then you lose the foreign interest, sort of winds down, because if they can't get the minimum size, then they'll look for other options. So from an investor perspective, I think one, it's good that it rewards the investors. People who have got a sort of a long position are then able to see better appreciation of the shares. The good financial ratios will see more interest coming from investors as well. So that's on the positive side. But on the negative side, we have to be watchful of the fact that the liquidity could affect your representation in the index, and also the minimum size that investors look for when they can't get when they want to invest in a good company. So we have to strike a balance and ensure that we're able to manage both. The float then is thinned, so investors have an investor who's looking for a minimum quantum then has to make a decision that I can't seem to get this quantum. Is this still a stock that I want to buy? So that has to be very, very well informed. But to your point, I mean, the fact that they're holding them as treasury shares then will also inform them, if there's so much pressure for the share, they can be able to reintroduce them in the future. And I think that's what they will be looking at. So I believe that's why I say they have to have a lot of corporate communication, have regular investor briefings. The chairman spoke about regular investor briefings. And as the share price appreciates, as the company does well, the investors will probably table a request and say, can you guys increase the liquidity? because we want the share, but we're not seeing it.
Ever since Nation Media went public with this intention of the share buyback, that was, I think, on the 29th of May. If you look at the capital uplift, the share price is about up 30%. Year to date is about 50%. From a signaling standpoint, is this a reflection that, hey, we do agree, the market is saying we do agree there was a misalignment in terms of the valuation, or is this just a sugar high which comes and goes?
Yes, I think the market is reacting to that. I think our market is very interesting. It has, despite strong fundamentals of companies, we still see some level of undervaluation sometimes. But what we're seeing with the nation is actually a sign that the objective of the share buyback is working. They wanted a trigger. They wanted to see the value of the share go up. So when they trigger that offer, then you've seen there's a bit of pressure. Everybody wants it. Because again, if the price was 16, and at the time the offer was triggered, and now it's at about 17, somebody's already pricing in that even if I get into this, I've got like eight shillings up. So there's a bit of pressure now to acquire the share. So I think it's achieved its objective to get the price where it is. I think post the closure of the offer, we will see the price stabilize above 20, which is going to be a good start for it. And then with the general market appreciation, then we'll probably see the price even improve. So I think we've achieved the objective of the buyback. So it's not a sugar high. I think the market reaction that was desired, and it's taking off well.
Jeff, why this is significant for the market is that we all know without a doubt in the past a number of companies have intimated their intention to go for a share buyback. And as I did mention, I once spoke to a CEO and I was asking him, why is your company perpetually discounted? I mean, we can't unlock value from this counter. And the point was we need to be able to activate the share buyback program because the nature of some companies will tend to trade at that discount. In terms of precedent, do you see this now paving the way for a lot more companies to follow this route?
Well, it has created a precedent, and hence we are potentially going to see other companies come through. Well, for us as the exchange, we feel that it's an option that companies have if they feel the shares are highly discounted. And our focus now is to get more and more companies to come and list on the market so that even as the float is being reduced by some companies owing to their own peculiar needs, we have more companies that are coming in to increase that level of liquidity in the market. So yes, we do foresee some come in to make that decision to repurchase their shares. Though we want it to be very well informed, like the Nation case, so that it's not just a factor of trying to just reduce the shares without a very informed, like for instance, taking debt to buy the shares, then doesn't make sense. Let it be a way of rewarding back your shareholders as opposed to paying them higher dividends. Just use those dividends to buy the shares and hence allow them to then get better earnings out of it. So I think it has to be very well informed. We'll encourage the use of the CMA guidelines. I think the guidelines will spell really under what conditions you have to achieve before you do that, and really is to see that well, it's an innovation that whose time has come as well. So you have to just accept and see how we can navigate with it.